All right, we are going to kick this off. So we are talking all about the VA loan today because there's a lot of myths and misconceptions. And as you guys know, my face and Brian's face is familiar from the briefing when you guys first came here. Some of this invitation has been sent out to you if you were here 3 years ago, 2 years ago. So we're good to circle back and just retouch base because I realize things can change over a couple of months. And you guys talk to people at work, you hear different stories. And so we're here to just clear the air and hopefully encourage you in this path towards home ownership if you have not done it yet. But then also, if you've bought, how do you exit when you get orders to leave the island? We're going to go through that too. So I've got Brian here, and I'm going to pass the baton to him in about 10 minutes after I finish my little spiel. But to kick it off, I'm just going to go through a couple slides. So you guys can see this okay? Yes, okay. So here we are. Who am I? Again, my name's Marina. I've been doing this for about 3 years now after being a professional wedding planner all over California and in Hawaii. My husband was Coast Guard, so we definitely had our fun there. Got to bebop around in PCS about 3 times. And it's been quite a journey. I also used to have a staging company, so I would professionally decorate homes for sale. And then our PCS journey really kind of took us all over the place. But 2008 to 2011, we rented with Airbnb in Guam. Like I said in the brief, it was like we weren't quite sure yet. We were young, didn't know we were doing, like 21 years old. Fast forward, we got PCS to the Bay Area in Alameda and decided to rent about 45 minutes from Post so we could save a little money and pocket the difference. We got married in 2011. So again, just young and didn't know what we didn't know. I don't even think home ownership was on our radar that it was possible. Fast forward again, we got stationed down in San Diego, loved it over there, started to dabble with the idea of buying, but I think we were just kind of unsure with our own personal finances and didn't have the right people to talk to. Husband was E5, E6 at that time, and we had our son. And then 2016 got out of the Coast Guard and decided to move back of his home of record, which was in Waianae. And so we spent 5 years there, lived with family, saved money. We actually started 3 businesses during that time and successfully sold one for a profit and kind of just lived this entrepreneurial post-military lifestyle and loved it. We own a honey company for those who don't know, which is also a part of my little life. But then we knew we wanted to buy a home. And I would say starting 2018, we really got serious about looking at it. We talked to a CPA and the CPA said, well, based on your income as self-employed, it's going to be quite a while because you need 2 years of tax returns to show that you have income to qualify you. So that was a sticker shock to me. I was so excited and ready to go. And I just felt like all my friends were feeling like home ownership in Hawaii was impossible and we'd have to win the lottery to be able to afford. But then the whole pandemic hit, and all of a sudden I was decided, well, am I going to keep doing wedding planning where all my brides are demanding their deposits back, or do I make this pivot into real estate where I was already successfully staging homes, already working with agents, and it was this natural progression. So fast forward 2 years after getting my real estate license, we got our first condo, which is this one down here. It's in Ho'opili and Kohina. Got it for $500,000, but it was small. So we have 2 little kids, as you can see in the picture, and we squeezed into a 1-bedroom with a bonus room, 700 square feet. But we made it work because I knew I was willing to make the sacrifice on space to just put my foot on something. And then once you do one, somehow it unlocks this mindset of, oh my gosh, I figured it out. It's not that hard. I can do it again. And I see this all the time with my clients. A year later, we just bought our second one and closed in the beginning of this month. But now we have a 2-bedroom with a bonus room. Went up in size. We have 1,100 square feet and 2 bathrooms. Praise Jesus. And went up in price point because, again, once we realized, okay, I get comfortable with the mortgage payment, it's just like paying rent. It's the same thing. You're writing a check every month. But the difference is one, we actually get to build some equity, and the other one you never get to see again. So now the plan is we've rented out our first one for a profit, and then we're on track and hopefully going to buy another one next year. And we're just going to keep this train rolling. So I want to show you how that's possible to do it at any stage in your life, realizing with my story too, everyone's scenario is going to be so different. No matter where you're coming from, where you're at in your career, whether you're single or married, I don't think it's a matter of if you're going to use your VA loan, but when. And so we can kind of talk about that. So who we are as a team, we're called the Ferris Team, located here in Hawaii and in Colorado Springs. We do a lot of PCS traffic back and forth. But 90% of my business is VA loan focused, and I love helping our military members buy and sell here in Hawaii. So just some quick clients on the right here. So we have the Cepeda Ohana. They're actually Chamorro, super fun family. First time using their VA loan, and it was so fun to work with them. We definitely went through the hurdle of them moving from the mainland. They lived in Seattle, used to have a big house, coming to Hawaii, having to downsize and getting used to that sticker shock of a single family home, but we made it work. And then down below is Misha. She is Army. She works at Tripler. First time buyer. I think she's like 24, but she's got her college degree. And so she's in a great place to start as an E5 and just get her feet underneath her. Found a really affordable price point for her in town, and she is loving it. And then a few more stories. So top left here, this is Max and Matthew. So they're actually two friends, not married, and they put their BH together to buy a single family home in Ocean Point. When they bought it, it was about 800,000. When we sold it, it was about 1.2. So they made a nice chunk of change there, and they were able to split the difference and walk away with about $100,000 each person before they PCS'd off to different locations. So there's many ways to take this and kind of come up with your own story of how you want to use it. Down below, Dominique and Kadedra, amazing couple. Also first-time buyers. Didn't know it was possible until we had a conversation with them and just broke it down. Hey, this is what you're getting for BH. Look what it can get you, you know, and they were just surprised that it could happen. They bought a condo in Mililani, just 10 minutes from work, and are super happy. Then top right, we have Eddie and his husband, and they just got married too. And same thing, they were really excited. They knew they wanted to buy a home, didn't know how. So we just had to lay out that roadmap for them. With them, they really wanted, you know, space to entertain. They love having friends over. They love cooking. They're both medics for the Army. And so they just knew, like, this is what we want to do. We want to start a home together as a newlywed couple. So that was really fun to work with them. And then bottom right is John and Aaron. They are a Navy couple, moved from the East Coast. For them, major change in the square footage. They had a 4,000 square foot home that they owned, ended up selling it for a profit with their VA loan. And then that enabled them to have over 300,000 cash down in Hawaii. So they're able to use that VA loan over and over and over and just rinse and repeat. And I just want these stories to show social proof that your coworkers are doing this, and it's very, very possible if you have the right perspective. So moving forward, again, who Ferris Team is, like, we're consistently top 20 in the state of Hawaii. We love what we do, and we've been around for a long time, over 12 years. And just our network, it really goes to show, I think, who we are as people, that we are authentically us, and we're not just trying to push and sell you on something, but we want to make this journey unique to you because every situation is so different. So what's going to work for one person is not going to work for the other. And I really pride ourselves on being that full circle agent. I want you to trust me, you know, 3-5 years down the line when it comes to sell your house, and we build that reputation over time. So what can you expect from this next hour? Number one, if you are new to Hawaii, because some of you guys literally just got here last week, we're going to do a quick area orientation so you understand the island. We're going to walk you through that process of home buying, the documents you're going to need for pre-approval, and then we'll roll over into how you go about selling if you need to do that. So on the left here, obviously, we have our beautiful island of Oahu. Something I go over in the brief a lot is this investment triangle that we talk about. So anywhere from Wahiawa, Mililani, Kapolei, Ewa Beach, over to Aiea and Pearl City is this triangle. Anywhere within that zone is going to be a really wise investment for you to buy and sell in this area. And also for our renters, you're going to have more inventory available for rent. When you start to go out further west, like the Waianae, the Ko'olina side, like, it's just traffic. And so prices reflect the traffic. It gets a little bit cheaper, but you have a sacrifice on your time. Same thing with North Shore. North Shore is beautiful, right? Don't get me wrong, but the commute is real. Turtle traffic is a real thing. If you don't know, tourists literally will, like, back up traffic an hour long because there's people trying to pull over on the beach. And just price points. It's the North Shore. It's really highly desirable real estate. Single family home is going to be over 1.1 in that area, and for good reason. And then if we talk about Kaneohe and Kailua, beautiful, beautiful area. Inventory is less because there's just less real estate in general, and price points are higher, again, because of the desirability. However, I have gotten quite a few military families into townhomes and condos on that side that are under the $900,000 price point. So you never know, but that's where we're kind of your matchmaker to say, where are you going to be stationed? What base are you on? Because obviously if you're a tripler or closer to town, we can focus more that side. But if you're going to be Schofield and Pearl Harbor, we can definitely go west. Okay, so let's roll into process. So number one is going to be partnering with the real estate agent like myself and my team. We understand that you guys are not market experts. That is our job. So I'm going to be able to tell you where the shopping's at. How's the commute over here? You know, what are the sports activities for your kids? I can tell you all of those kinds of things. And then once we're linked up and we've got a good connection going, we're going to get you pre-approved. Pre-approval is absolutely essential for us to do anything. Before we even open a door on a showing, we have to get you pre-approved. And that's just really going to understand what is our affordability and our comfortable monthly payment so that you're not house poor. That's the last thing I want to do as a professional is put you into a home that you cannot afford. And then you come back 6 months later and tell me, Marina, I need to sell because I can't afford this house. We're not doing that. So we are going within your comfort zone, making sure you guys are really, really confident moving forward. And then we actually go out and shop for your new home. So I call this the dating phase of our relationship where we're dating homes. But then we're going to make an offer, right? We're going to find a home. Maybe we narrow it down to top 3. And then our lender is going to say, okay, here's 3 scenarios for you and how we can structure different offers based on that. And when we're making an offer, we're keeping in mind that we have to keep that seller happy and we also have to keep you happy as a savvy buyer. So we have to come to this meet in the middle. We're not going to be offensive and offer 50, 75,000 under ask, but something that makes sense and something that would get accepted, right? My job is to get you in contract. So then once we get into contract, we're officially engaged with our house, meaning we're like pretty committed at this point, but we haven't sealed the deal yet. So we have the intention to move forward, but there is a few points within the contract you could cancel if you absolutely had to. But really, you're going to hear this term escrow a lot. So escrow is just that third-party title company that keeps us on track. They're doing the transfer of the title. They're kind of that third-party neutral to keep us on point too with how money flows back and forth between the seller and the buyer. And then let's say we get all the way to closing, which this can take as little as 21 days from offer acceptance to keys, all the way up to 45 to 60 days, depending on your situation. But on average, I would say most of our VA clients close within 30. That last week, we're doing your signings, we're getting your utilities set up, and then the very last step is we sign and we get keys and we barbecue at your house. So when you're looking at comparing renting versus buying, it isn't super different. The same thing, you're talking to listing agents, you're doing showings, you're doing your pre-approval, your financing credit check, and then you're saying, okay, I look qualified, let's get this place to live in. The big difference, which is what Brian's going to go over, is how you can use that money as leverage. Because as we know, BAH and even past retirement, it's like, this is leverage. This is money passing through your hands tax-free. How do we want to use it? So on the left side, this is what we need for your pre-approval, which Brian's going to run through too, but it's not super complicated. Pre-approval process should take you no more than 15 minutes. And it's literally an online questionnaire to say, okay, this is my income, this is my credit, this is where I've lived in the past. And then Brian has a magical calculation that spits out your pre-approval on the other side. And then on the right side, this is just some common misbeliefs I hear all the time from people who are ready to sell, but they're scared, right? Because I understand this is your baby now. This is the biggest asset you've ever owned. Most people have not owned a $700,000 house, or in this case, a $1.1 million house in many of our single family situations. So just to let you guys know, this is real facts. You can sell fast, meaning in less than 60 days for sure to close. You can sell for top dollar and you don't have to negotiate on commissions and your price structure. Like there is a marketing strategy that we use that's proven. You can sell your home with ease, meaning you don't have to stress out. You literally lean on us to do everything for you. And we just ask you to sign on the dotted line and give you, do you prefer X or Y? And you tell us and we go to work. You can sell and live in your home up until when you have to leave. So you can do, like I said, a post-occupancy agreement where we close, let's say we hustle this thing, we get an accepted offer in 2 weeks, we close 30 days later, but you don't have to leave for 2 more months. What do? You can actually rent back from your buyer. So we can walk you through that process. And the last bullet point there is you can get connected to the top agents at your next location because our network is nationwide and actually global. So the very cool thing about my company is that we have VA vetted agents nationwide who are ready and willing to go. And we vetted them for you. So you don't have to go to a Google search or a Zillow profile and do all this research. It's like people we have set up, they know the market and they can get you right into that home. So that was a lot really fast. And I can definitely send out these slides to you later so you have them. But I just want to share like encouragement that you can do this. Anyone can do this. And it's not a matter of if, but when. So with that, Mr. Brian, are you ready?
Aloha. Hi, everybody. Nice to see some familiar faces here tonight. Once again, my name is Brian. I am a VA specialist, and I'm going to share some of my slides and talk a little bit about the VA home loan benefit. Now, some of you might have used your VA before, and you might be experts already. This is going to be a slightly bird's eye view. It is going to be a very generic or general type of information. So if there's any specific questions that might pertain to your situation, please email me or please drop a comment in the chat and we can connect after this webinar. Awesome. Let me share my screen. All right. So it should be saying the new VA home loan benefit. And for many of you, if you're first-time home buyers and this is your first time using your VA, it's just going to be the VA home loan benefit. Okay. For a lot of people that have used it in the past, especially prior to 2019, there's a lot of things that changed and that improved, and that's why it's titled the new VA home loan benefit. And the logo on the right here is our team, Task Force Mortgage Team. And just a little bit about who we are. We're a specialized team within a larger company called Cross Country Mortgage. We're actually the third largest direct lender, retail lender. And within that company, our group is a group of VA specialists. So we focus on VA and we help our veterans. And mainly my passion and my goal is to educate you all, educate and inform, because statistics show that 1 in 3 veterans are unaware of their VA home loan benefit. And knowledge is power. Can you all agree to that? Right? So if you don't know, you don't know. But if you know, at least you make an informed decision, whether it's renting or buying. And I'm not saying that you have to buy or you should buy. It's really subjective. It's all up to you and your family. But let's do a quick pop quiz. What is the #1 expense for families in America? That's right, housing. Right? Whether you rent or pay a mortgage, one way or another, that is going to be the biggest bill that goes out of your household budget every single month. Now, Marina talked about some similarities between rent and mortgage. A lot of things are very similar. And yes, one of the things that's very similar is that you're going to write a check to somebody on the 1st of every month. And that money is going to leave your checking account or your savings account, and it's going to go and pay to put a roof over your head and your family, and a beautiful place to call that you can create memories and that you can call home. Right? Now, let's talk a little bit about the differences. So with rent, on the 1st of every month, once you cut that check, give it to your landlord, you're paying someone else's mortgage, and you don't ever see that money ever come back to you whatsoever. Okay, it's spent, burnt, and gone. A mortgage payment or a mortgage check, once you cut that check, yes, it is gone, and it functions to get you the same thing, right? A roof and a home. But with a mortgage, you do see some additional returns. And let's talk a little bit about that. So #1 here, bullet point #1, appreciation. Now, some of you might already know that Hawaii is an appreciation market as opposed to like Texas, for example, which is a cash flow market. And what that means is that a place like Texas, for example, the home prices are very affordable. For example, like $250,000, you can probably get a 3-4 bedroom nice house. Here in Hawaii, $250,000, maybe you get a studio. Okay, but that home could easily rent above what your mortgage payment is, and thus creating cash flow for you and your family on a month-to-month basis. Here in Hawaii, our home prices are high. As you might have already noticed and had some sticker shock already, our home prices are high. $250,000 might get you a studio apartment. Okay, but the thing about Hawaii and the Hawaii market is that we appreciate about 5 to 7% year over year, and that's a conservative estimate. In the last 2 years, and in the last 2 years is an anomaly. It's not the norm, but we've seen 20%, 19% appreciation year over year. So people who bought in 2020 at the beginning of the pandemic and are rotating out now in this season right now, they made a lot of money. And Hawaii has the potential to do that. And I won't go into too much of the mechanics or the nitty-gritty on why, but Hawaii has been always a safe haven to park your money in real estate. building equity goes in hand with appreciation. As you repay back your loan, even though you start off with 0 down or 100% financing, as you pay back your loan, your equity portion starts to increase. Now that gets accelerated with appreciation as well. So by the time you leave Hawaii, you might actually have, let's say 20% equity stake in your property, okay? Which when you sell, you can receive the proceeds, and that can start the next chapter of your life journey. And then lastly, the third benefit that you don't see immediately, or it's more of a midterm or a short to midterm benefit, is a tax benefit. The United States of America is the only country in the world that classifies mortgage interest as a tax write-off. So even you, as a W-2 wage earner, you're basically a salary employee of the United States Army or Armed Forces. There's not, as a business owner, you can write a lot of things off, like cars, rent and things like that. But as a W-2 wage earner, there's not a lot that you can write off. However, in our tax code, one of the things that you can write off is the interest portion of your mortgage payment. So let's say your mortgage payment is $3,000. $2,000 of that $3,000 initially, let's say, is going towards interest. That's going to get tallied up throughout the course of the year. And at the end of every January or in the beginning of February, you're going to receive a form called 1098. And that form allows you to offset your taxable income when you do your taxes. So for most people, what it's going to look like is an increased tax refund. Okay, so that's another huge benefit that is only for, that is unique to the US. So those are the three benefits that you're going to see money coming back, whether it's next year's tax returns, or in 3 years when you sell in PCS, or in 10 years when you hold on to it and then sell it. And just a quick thing that Marina, I think, may have mentioned is that in Hawaii, typically, if you look at the track record of real estate, every 10 years, our home values double. So whether it's a year from now, 3 years from now, or 10 years from now, you're going to see some sort of return from that mortgage payment that you write month to month. Or anybody have questions? Sound good? All right, moving on to the next slide. So let's myth bust some myths about the VA loan. So here are some common myths that I hear all the time. A lot of people say, oh, I can only use my VA once, so I'm going to wait until I find the dream home, or I want to build on a plot of land where, I'm going to retire. Okay. Your VA loan, you can use it as many times as you want to. Just as Marina's personal testimony, she shared that with you, she's already used it twice in the span of a couple of years. Okay, and she can still hold on to that first property. So that kind of links into our second myth, is that you can only have one VA loan at a time. No, you can have multiple. I've seen people that have 3 VA loans at one given time. The VA funding fee is too expensive. Yes and no. It is an additional fee, and we'll cover a little bit more about the VA funding fee in subsequent slides. It is a fee that does get added to the total loan amount, and that is how the VA runs their program. It's yes, taxpayer dollars, but also through the VA funding fee that they charge. Now, it's a few percent of your purchase price that gets divided over 360 payments typically. So you're looking at anywhere from $40 to $80 or so of your monthly mortgage payment is actually going to the VA. So, is that a lot? Maybe for some people it is. For some people it's like, oh, 40 to 80 bucks, that's less than my cell phone bill. Okay. So it's subjective. The VA takes too long is another thing that I hear all the time. And yes, it did before. Since 2019, there's been a lot of modernization that's happened, a lot of streamlining that's happened. So surprisingly, I think VA actually takes, in some cases, can be quicker than conventional loans or FHA or USDA, just because it's been so streamlined. And especially if you work with experts like Marina or myself, who know what we're doing and who know how to strategize a strong VA offer, it's not going to take too long, because we know exactly how long the appraisal is going to take. We know exactly how different milestones of the loan process, how that's going to go. So we can predict pretty much how long it's going to be. And from the get-go, we can say it's going to be a 21-day close or less, or a 30-day close or less, or a 45-day close or less. VA appraisals always come in low. VA appraisals can come in low, just like conventional appraisals. But here's the difference between VA appraisals and conventional appraisal or traditional appraisals. So with a traditional appraisal, the appraiser is looking for the quality and condition of the property and also comparing it with most recent sales. Okay. The VA does the exact same thing. Actually, in fact, VA appraisers are also conventional appraisers that just got certified or approved by the VA to do VA appraisal. So they use the same standards. However, on top of that, the VA appraisers will be looking at health, sanitation, and safety concerns. So if there's anything that has to do with the health, safety, and sanitation of the veteran and the veteran's family, then that's when it gets a little bit tricky. But again, it comes back to who are you working with? Are you working with experts like Marina and myself that know exactly, hey, this is going to be a really good price point to offer in at because we think the appraisal is going to be supported. You want to go in with a laser sharp, laser focused strategy and precision, and that is what we do. And kind of segueing into the last myth, VA offers don't get accepted. Needless to say, again, are you working with the right people, right? We're not just machine gunning and shotgunning, just offers out there, see what sticks on the mud. With surgeon-like precision, we're going in and crafting offers and negotiating on your behalf and structuring the financing so that our offers do get accepted. And also, my role as the lender isn't just crunching numbers. My role is actually educating the listing agent as well as the seller on why our VA offer is as strong as, or if not stronger than any competing conventional offer, and to make that case for you. Okay. What is the VA home loan benefit? Okay, so the VA home loan benefit, it's not the US government that lends you money. It is lenders like myself that are VA approved that will be lending you the money. However, the US government does back the loan in case of default. So that is called a guarantee. And so that's why there's certain things that the VA loan allows you to do. For example, zero down, lower interest rates, no PMI, things like that. We'll cover that in the next slide. So because there is US government backing, it's such a great loan. What can you purchase? Single family homes. You can purchase condos, townhouses. For condos and townhouses, you want to make sure that they're VA condo approved. If they're not, make sure that your lender knows how to go through the condo approval process. It's not that hard, but you need to know what to do exactly, and the lender needs to know. So if they haven't done one, then it might cause a delay in the process. 90% of the condos and townhouses here in Hawaii are VA approved, so most likely it'll go through without a hitch, but I've had to do VA condo approvals for at least, I think, about 4 or 5 condos. But once it's the VA approved, the whole condo, now any unit in that condo or in that community can be bought using the VA. So once in, good for the rest of perpetuity until an issue happens. Construction is also possible. Big asterisk on that. And let me caveat that very strongly. So with VA construction loans, it is a lot of red tape. So I would say VA renovation and VA construction loans are the two loans that still have a lot of remnants of the old VA home loan benefit. Yeah, you need to get a contractor, a VA approved contractor, submit bids, and then it takes longer. It's a lot slower. It can be a lot slower. So there's a lot of different tactics and strategies that we can discuss. If construction and renovation is a huge priority for you, there's ways around that we can work around it and get the goals that you have achieved. And then refinancing, streamlined interest rate reduction refinance loan. This is basically if in 8 months, 9 months, 10 months, a year, the rates come dropping down, then all you got to do is give us your thumbs up and we can literally lower your rate, lower your monthly payment. Your term will be extended. because it's going to be a new loan. However, your monthly payment could drop by $300, $400, $500, just depending on the rate. Okay, so that's going to be a huge help when rates start coming down. And speaking of rates, I'm not going to ignore the elephant in the room. I know a lot of you have read articles or seen news videos and things like that saying that, oh, all-time high, 20-year high in rates. Yes, it is high. And but there are ways around it. There are creative ways around it. But the philosophy that, I would encourage anyone to have in this moment right now is that we need to accept that, home prices are elevated. Rates are going to be high for the time being. But if you're really wanting to create generational wealth and to jumpstart and own an asset, this is now the time to land and expand. Okay, that is a strategy that you might want to consider, is land and expand. Even if it's a scale back, and not the ideal home, and it's just a starter home, at least if you land into a property now, you can start building equity, ride the waves of appreciation, and then snowball that equity into the next property, the next property, the next property. Okay, so it's not going to be a straight shot into your dream home. It's going to be a process, but at least you're landing somewhere and you have the capacity to expand, rather than just waiting on the side and just waiting for that moment and maybe the opportunity passes you on, okay, or passes by you. So let's talk a little bit about the advantages. So I mentioned zero down, lower interest rates, no private mortgage insurance. Private mortgage insurance is a separate insurance policy that typically most people have to obtain if they're putting 20% or less down payment. Okay, it protects the lender against potential default. So in case you can't pay your loan back, it protects the lender. With VA, because there's that government backing, right? You don't have to pay the private mortgage insurance. Low to no closing costs. So for many of you that are PCSing, I know you're putting a lot of travel expenses either on your savings or your credit card. All right. And so the last thing that you want to worry about is closing costs. Closing costs here in Hawaii will run you typically about 1 to 2% of the purchase price. So that can range anywhere from about $6,500 to $12,000, depending on the price of the property. And that's the last thing that I want you to worry about. So if there's a way that either we can finance the closing costs, or we can have seller credit cover the closing costs, I will structure the loan so that you can literally come to the table with a pen, sign on the paperwork, not have to put any money out of pocket, $0 out of pocket, and be able to get into a home. That will be one of the goals that I will be consistently working for as we work and move forward. Lastly, flexible options. So one of the reasons why I love VA, and just a little bit about myself, I actually come from the film and TV industry. I'm not a finance bro. I don't have a finance background. I was a wannabe actor that turned into a movie person, and ended up becoming a flight attendant and was training to become a commercial pilot. That's kind of my story. But why I got into the VA space and why I became so passionate about it is because the VA is very forgiving and lenient. So I know a lot of us in our 20s, when we were younger, we've screwed up on our money, right? You don't have to answer me, or I know I screwed up. I wrecked my credit. I got into a lot of debt that I shouldn't have, and it took years to rebuild that back to a place where I could start getting better rates and things like that. With the VA, even if you have a collection, or even if you have certain issues with credit, there is a lot of forgiveness. And we've seen, and Marina and I've worked with so many buyers that have kind of wrecked their credit, but they were on the road to recovery, the path to recovery, and buying a home was part of that strategy to start building equity and wealth so that they can really overcome, that generational curse of poverty that they grew up in. So, VA can be a life-changing experience for many people, and I hope that that Marina and I get to play a little bit of a part in that story for your next chapter. Who's eligible? All of you guys are. And one cool thing, fun fact is that Congress is toying, or they're passing a bill around, or it's still in drafts and it's not finalized. It's not law yet, but they're trying to make the VA home loan benefit something that you can pass on to your kids, just like the GI Bill. So, maybe in the future, it can be the children, grandchildren of retired veterans or separated soldiers that can be eligible as well. Certificate of eligibility. This is the reason why I'm dedicating a full slide to this is because I want to share a story with you. The certificate of eligibility is the document that ultimately confirms whether you're eligible and how much you're eligible for with the VA. Now, the reason why I'm sharing this is because I want to share a quick story. I had a client who I was doing just a one-on-one meet and greet. We're just talking story. And then he, out of the blue, says, "Hey, Brian, I can send you my certificate of eligibility." And that to me was very odd. And I asked him, how do you have your certificate of eligibility? And yes, you as the veteran can go and get your certificate of eligibility. Totally fine. And it's totally possible, totally normal. But it's not quite standard. And come to find out that he had been working with a lender previous to me, and the lender had asked him to go pull his certificate of eligibility. As a VA lender, I know that it's very easy for me to go and pull a soldier's certificate eligibility once the application process started, and that's the normal process. And that to me already signaled that, number one, either this lender is lazy and they don't want to do the work. It's very simple, but they don't want to do the work. Or number two, they don't know how to do the work. And those two facts are already red flags. And so I told the gentleman, I said, "Sir, you know what? Thank you so much. I can actually pull it. And I actually would like to pull it myself just so that I know that it's from the VA directly." But I let him know that, hey, just so you know that the lender should have been the one that provided you with the certificate of eligibility, not you yourself providing it to the lender. And the reason I'm sharing this story is because obviously I would love to work with each and every one of you, but you as the veteran, you deserve the best deal that you can get. And if I cannot provide that for you, then I will be the first person to tell you to go with B lender, C lender, D lender, whoever it is, and say that that person has the best deal in town right now, go with them. Right. And I'm here to be an advisor and an educator. Of course, the byproduct of it is that if I can do your loan and process the loan for you, then awesome. But if I cannot, then I still want to bring that value to you guys. Okay. So this is why that I want to share this slide with you. Please go shop around, and may the best man win. Now, let's talk a little bit about the VA funding fee real quick. So for the first time use, you'll see the top left bar here, 2.15%. If you do zero down, 2.15% of the purchase price is going to be added onto the loan amount, and that is the VA funding fee, right? So if you buy a $500,000 property, it's going to be right around like 12 or 13,000 added on. And so you'll see the total loan amount being higher than your purchase price. That's okay. Subsequent use, meaning that second, third time or more, that VA funding fee does go up to 3.3%. Okay. If you do 5% or more down payment, then the VA funding fee goes down to 1.5, 10% or more, 1.25%. So if you've already bought a home in the past using your VA, or if this is your first time, just know that next time you use it, if you do zero down, you're going to have a greater VA funding fee. Okay. One of the things that I try to teach all my clients that are buying here in Hawaii is that when you sell your home, when you rotate out, don't go spend that money and buy a new car. Try to put it towards the down payment of your next home, wherever your next duty station is, because you'll see the subsequent use. Even if you just do 5%, that's less than half of the VA funding fee that you're paying. And that's, thousands of dollars that you're saving that you don't have to pay to the VA, and you're keeping it in your house. Okay. So just know that, make wise decisions, and we're here to help you to make the best informed decision. Oops. Who's exempt? If you're a Purple Heart recipient. If you're active duty, then you have to be a Purple Heart recipient to be exempt. For those of you that are separated, if you receive a disability rating of 10% or more, your VA funding fee is exempt for the rest of your life. So 0 on the VA funding fee. Let's talk a little bit about budgeting. So the rule of 500, I think you might have all seen this. So what the rule of 500 is that basically for every $500 that you can pay towards your mortgage or your housing, that equates to about $100,000 in home price or home that you can purchase. So 1,500 would be 300,000 and 3,000 would be, yes, 600,000 is the correct answer. So that's just a quick way that you can just do math in your head when you go to an open house and you see the price of a home. I mean, you know, unless you have like a calculator, and a lot of the times Zillow, Redfin, all those websites have calculators, but it's really hard to like really understand how it's being calculated. The simple math is rule of 500, okay? It does not include taxes, insurance, and HOA. And HOA is a real thing here in Hawaii. I call it the paradise tax. So you do want to make sure that you account for those as well. Right here, BAH, how valuable is it? Here's a list. E5 with dependents, about $3,300. So you'd be right in that $600,000 purchase price range just using your BAH alone, okay? So you can kind of see where you fit in and kind of do the rule of 500 and say, if I wanted to just use only my BAH, you know, this is how much I can afford. It gives you a rough idea of the home that you can afford. Also, here's another cool chart. Over the course of a 20-year career for a married enlisted couple. Now, this is using 2023 BAH rates. It will fluctuate year to year. However, you know, if let's say we just kind of, you know, use 2023 BAH rates, the bottom number right here, $481,542. That is the amount of money that will pass through your hands, and you get to decide whether it goes into someone else's pocket or it comes back into your pocket by investing back in yourself through purchasing your home using the VA. Now, mind you, this is tax-free dollars, okay? So you're not being taxed on this. I mean, that's a lot of money, right? Almost $500,000. Now, the choice is yours. What do you want to do with it? Throw it away, write a check, spend it, burn it, say sayonara, or do you want to recapture some of that and start building generational wealth? The decision is yours. The choice is yours. Quick story time, and then I'll pass the baton back on to Marina, and we'll wrap it up with any Q&As. So this is the story of my friend, my best friend. He's also my coworker, lives in the same community, and I live in Ho'opili in East Kapolei. And he found a place last August, a year ago, and he offered and bought it for $452,000. Now, he's not a soldier, or he's not active duty or a veteran, so he had to do conventional 5% down. Okay. Today, he wanted to do a HELOC, and today, I mean recently, and he got it reappraised, and the appraisal came back at $682,000. That is $230,000 of equity that he is sitting on in the mere span of a year. That's almost $250,000. I mean, what can you do to earn $250,000 in the next year? There isn't a lot, you know. I mean, let's be honest, the military is not going to give you $250,000 or $250,000 in the next year, right? No one's going to get $250,000 raise. So real estate can be a very real way to earn money, and good money too. Now, I will let you know this. This is a rare example. This is a very rare case. Now, it's not going to happen. I'm not saying it's going to happen to everybody. It's probably going to happen to 1 in a million, maybe. He was very lucky. But this is just to show you how much of an appreciation state Hawaii is, okay? All right, last slide before Q&A. 5 steps to a successful VA home loan. Work with someone that's an expert, that knows what they're doing, okay? Even if it's not me or Marina, find someone, interview them, and know you know, their performance. You want to make sure that the task force that you have has your back, and budget is so important. A lot of lenders will try to pre-approve you for the max amount, which might be $800,000, $900,000, $1.3 million. But that does not mean that that's what you need to be spending on your home. Okay. So the most important thing for me is to learn your goals, your story, and understand your budget and how can we fit the property to fit that budget. Okay. So let's honor your budget. Get pre-approved. Pre-approved and pre-qualified are two different things. In Hawaii, a pre-qualification means it's like toilet paper. Okay, that's what my manager says. It's worth less than toilet paper. A pre-approval, we vet through your documents, your income, all that stuff. And so when we issue a pre-approval, it just means that it's the gold seal is on there that the offer is good as cash. Buyer's agent, you definitely want to work with someone like Marina, who is not only a military relocation expert, but she is also your local market expert. She knows everything for the island of Oahu, as well as the neighbor islands. And you want to make sure that you're working with someone that's a buyer's agent, but also has foresight to 2, 3, 4, 5 years down the road, maybe even further down the road, to help you make the best investment when you purchase your home. Finally, the fun part, go shopping, and then call the movers and move in to the home, to the place that you're going to call home for the next 2, 3, 4, 5 years. So it's pretty simple. We're here to have your back, and we're here to be your task force. All right, back to you, Marina.
Good job. That was so awesome. And I just wanted to mention too, like, what is it really like to work with Brian and myself? We're a lot of fun, I like to think. But we do a lot of text messaging. So really, it's getting a group chat going. There's constant Q&A going back between you guys and us as the professionals to say, I don't really know what I'm doing, or can you evaluate this property? What does this one look like on a month-to-month basis? Is this a good investment? And we're just constantly having that dialogue. And Brian is super responsive. There are some lenders who will work 9 to 5, and that's all you get is the 9 to 5. Well, guess what? You guys get off work at 4 or 5. So how are you supposed to get the help, right? So we go above and beyond sometimes, and not to say all the time, but sometimes we will be up at 10 o'clock and 11 o'clock at night to make sure that we're doing what needs to be done to help you guys move the needle. But I think we're pretty cool people and we have a lot of fun when we do it. So next steps, you guys, I mean, is there any questions? Do you guys have any questions? Anything? I think one question I get a lot of the time is like, what does your credit score have to be? What's like a good target for credit score? What do you think, Brian?
Yeah, that's a great question. So the big picture in the technicals is that VA technically does not have a minimum credit score requirement. The various lenders will have what's called an overlay. So VA has their own guidelines, and then the lender has their overlay on top of the VA guidelines. That those lenders may have a minimum credit score. For us, we technically don't have a minimum credit score. However, if your score is low, you're not going to get the best pricing. And if you're at around 620 or above, that's good. Doesn't mean if you're less than 620, we can't do it. We can, but 620 or above is good. Another kind of tier is 680. And then also anything above 720, 740 is another tier, is what we usually see. It's not exact science, but that's kind of the trend that I see a lot of times. But also, the other thing is that if your credit score is low right now, let's get on a plan. Let's find a way and a strategy to get your credit score up in the next 3 to 6 months, and come up with a strategy so that we can move towards that goal of getting you into the home that you love.
Mm-hmm. Another thing I wanted to add to, a lot of the times I hear that people are rate shopping with USAA or Navy Federal Credit Union, because those are common banks with military, right? We're trusted. We might have our checking account with them. So we think, hey, might as well get my loan with them too. Well, what are the pros and cons of that, right? And I have seen Brian single-handedly save a handful of deals, or, really come to the rescue because someone was promised something over here and then they got under contract and, oh shit, it's not what I thought it was. How do you help me? And so, Brian, you just want to touch on that a little bit of what they're seeing online versus the reality?
Yeah, that's a really great question. And, I don't want to knock on USAA or Navy Fed, because I think they're great institutions. Like USAA does insurance really, really well, and they do checking and savings really well. And so does Navy Fed. Navy Fed has great credit cards. Navy Fed has great auto loans. Okay. But when it comes to mortgages, they're operating on the hours of a traditional bank. So 9 to 5, Monday through Friday. And if they're not in Hawaii, and let's say on the West Coast, or, like central time, then we have a time difference. So you definitely want to work with a local lender that knows the local market. And also Hawaii is a very unique market. We have things like leaseholds, fee simples. We have, all sorts of different things that, are different from the mainland, that you definitely want to work with someone that knows the local market very, very well. And that is able to respond at 7 p.m. at night or 10 p.m. at night or on the weekends, right? Because, most likely the loan officers at Navy Fed or USA, they're on salary to a lot of the time. So they won't, have the incentive or initiative to answer you out of office hours.
Yeah. And then I can just touch on that too. So when I'm negotiating and fighting for your offer, if the bank is on the mainland, and I'm submitting it, in the evening, then my lender's not going to be able to call, if they are even going to call, until the next morning. Like, I really, truly prefer to work with local lenders because of that reason. So I submit your offer. Brian's going to call within 5 minutes to say, hey, this is why this offer is so strong. It just really solidifies everything that we're doing to show that you are a qualified buyer. And the communication wise, again, if it's a mainland bank and they're located in Texas, well, guess what? We got to get all of our business done between 9 to 1 p.m., basically Hawaii time. And then we're out of luck till the next day. And so trying to close on a 30-day timeline even can be challenging with a mainland bank. And then I know, because I play the listing side too, I'm the listing agent. So when I'm reviewing offers, and I'll see mainland banks sometimes, immediately a couple of red flags. So then I have to go through and vet that lender. I have to be able to get in touch with them. They need to answer their phone. And it's just, people want to work with local in Hawaii. It's a very specific market. So just some good seeds to plant as you shop. Obviously, be a savvy consumer. We want you to shop around and talk to people, but knowing that our track record, I think, talks for itself, and our reputation, and clients have really great things to say to us about their experience, just goes, it's priceless, right? And that really is like what floats our boat. So I think we can wrap it up, guys, but thank you so much. I know this was super informative. There's a ton of information. And what I would love, action steps for whoever is watching the recording, is to reach out for us. You can email us directly. I'm going to put this on YouTube, I think, if you're cool with that, Brian.
Yeah,
And we'll just have our contact info, but we can do a one-on-one strategy call. So basically, take your scenario now. What are you paying for rent, or what are you doing with housing? Should we buy? Could you buy? And just see, what does that scenario look like for you and your family? And whether it's here in Hawaii or the next duty station or whatever, we're here to be an advisor along the process. So yeah, cool. Okay, we're good, guys.
awesome. Nice talking with you all. Have a great evening, and we'll see you on the road.
Bye.